can see right here, we started day trading at about 10 a.m., $2,500 up. We went up to 3,200, made about $700 that hour. And from 11 to 12, we made about 750. And this is not some complicated thing. If you understand how to use these basic technical indicators, you can make literally hundreds of dollars per day. The only thing that you have to keep in mind to make sure that you can actually profit and not lose money day trading is what is up, guys, and welcome back to another video where we're gonna show you how to get those luscious and difficult to achieve degenerate gains, where we're not going to be talking about long-term hodling things like Bitcoin and terribly boring things like Cardano. Instead, we're gonna be talking about how to actually make handy money within 24 hours. And we're gonna be talking about a few basic technical indicators that I've had a lot of recent success with, and most importantly, how to actually follow Uncle Warren G's #1 rule for investing, which is don't lose money, and his #2 rule for investing, which is to refer to rule #1. So in today's video, I'm gonna jump into my screen and show you guys exactly how you can start learning how to day trade cryptocurrency, what technical indicators to look for, how to actually set things up so that you have the absolute best chance for success with your cryptocurrency day trading strategy to actually minimize your losses and improve the win percentage of your trades. Because with day trading, what it comes down to is just your percentage of accuracy. If you have a 51% accuracy with your overall trades, that means that over the long term, you're gonna make profit. Now, with our trading methodology, we usually average somewhere between 75 and 90%, depending on how automated the strategies that we're using are, and of course, depending on the overall macroeconomics of the market as a whole, what our Lord and Savior Jerome Powell has been saying about the Fed and the rates and all of that fun stuff. And so let's actually jump into my screen, and I'm gonna show you guys exactly step by step how to start making $500 a day using an easy cryptocurrency day trading strategy. But really quick, before we jump into my screen, make sure if you haven't, you do two quick things. Tap the like button. Why? Because it helps me find more people just like you who are degenerates, just like myself, who want to actually have those cryptocurrency Coinbase Pro account gains so that you can smash it into everybody's faces and rub it into your family and your sweet old auntie about your disgusting crypto gains at your next Thanksgiving family gathering. And if you haven't already, like 90.3% of you guys awkwardly who just decided that it would be a cool idea to lurk and watch my videos but not actually press subscribe, make sure you tap the subscribe and turn on the bells. And last but not least, make sure you comment down below crypto day trading. And if we get 500 comments that say crypto day trading on this video, we'll release a part 2 where we actually go into much deeper detail about what technical tools to use, how to actually minimize your losses, and even more importantly, how to automate and backtest your day trading strategy to actually leverage and utilize TradeView actual automation. And so make sure you tap the like button, subscribe, leave a comment down below, and let's jump into my computer and get started. All right, guys, welcome into my computer. So for all of my United States brethrens, probably the easiest exchange to use is Coinbase Pro. They do a great job, especially for US-based folks. If you are somewhere outside of the US and you don't want to use Coinbase for some reason, then what I suggest is Binance. For US-based folks, you're not actually going to be able to use Binance yet unless you want to use a VPN. And so we're going to actually suggest Coinbase Pro for our US folks and Binance for people that are outside of the US if for some reason you don't want to use Coinbase. And so the first thing that we're going to do is we're going to actually choose what's called a cryptocurrency pairing, right? So we're going to come into an actual website called TradingView. You can set up a completely free account. If you want, access to some of their really advanced tools, you can pay for an account. For the sake of this tutorial, we're just going to be using a free account because, to be honest, you don't really need the paid account for a lot of things with day trading unless you're like super serious. And so the first thing that we're going to do is actually come in and choose our pairing. Now, what does this mean? It means that we're going to track Ethereum against the US dollar, right? USDT is basically a stable coin that tracks the movement of the fiat currency USD. And so essentially what we're gonna do is we're gonna type in ETH space USDT, which is gonna track Ethereum against USDT, which tracks the US dollar. And I know that sounds a little bit complicated, but it's actually just gonna bring up the chart that we wanna look at today. So this is going to be the chart that we're gonna be looking at. at. Now, this might look a little bit overwhelming or stressful or anything like that. The first thing that we're gonna do is actually set the time duration, right? So the time duration basically shows, what time duration each individualized candlestick represents. So we're gonna leave it on 15 minutes, which means that each one of these actual candlesticks right here represents 15 minutes. You can see right here, 4 o'clock, 4:15, 4:30 down here at the bottom, right? And so the first thing that we're gonna do is actually set up some moving averages. So we're gonna clear what we had before here, and we're actually going to set this up from scratch so that you guys can see exactly how this all works. So obviously a red candlestick means that there was an overwhelming majority of sellers during this 15-minute block. A green means that there was a majority of buyers, right? So, a really significant red right here means that everybody was kind of selling off during this 45-minute period here. And then the green right here, this means that, during this 15-minute and this 15-minute period, during this 30-minute period, there was an overwhelming majority of actual buyers, right? So the first thing that we're gonna do is actually come into the indicators, metrics, and strategies section of TradingView. And this is where you add things like Fibonacci, you can add things like RSI, simple moving averages, MACD if you want to talk about, the convergence of moving averages. There's a lot of different things that we're going to be talking about, but we're actually going to keep it very, very simple and just type in moving average, right? So we're going to click moving average. It's going to add one right here. We're going to click it one more time. It's going to add a second one. Right, and so what we're gonna do is we're gonna close out of this. We're gonna click into this first one right here and go to settings, right? The first thing that I like to do is change the color. So for the first one, we're gonna use green, and we're gonna click green. We're gonna make it a little bit thicker so it's easier to read right here. And then we're gonna go over to inputs, and we're gonna change the length to 50 days, right? Generally, the most common actual moving average indicators are 50, 100, and 200 day moving averages. For the sake of this video, we're gonna be using 50 and 200. So what we're gonna do is we're gonna click OK. Then we're gonna come down to the second one right here. We're gonna click the same thing. We're gonna put this one at 200. We're gonna change the style, and we're gonna make this one orange, and we're gonna make the line a little bit thicker as well. And then what we're gonna do is we're gonna press OK. Right, and so what you can see now is we have two different moving averages. Obviously, the green moving average represents the 50-day moving average, and the orange line represents the 200-day moving average. Now, you can see that when the actual lines cross, which you can see right here, if the 50-day or the lower average, the more recent average, crosses below the 200-day moving average, that is generally known in day trading as the death cross, which means that it could potentially indicate a short-term or even a medium or longer-term bear market or actual sell-off, right? And so we can see right here that when the 50-day moving average actually crossed the 200-day moving average, right, there wasn't a huge amount of actual action here, but then we did see it just a little bit later have a significant sell-off right here, right? It did rebound, even though we did see it quickly rebound after. And so with indicators and technical analysis, oftentimes you want to combine 1, 2, or even 3 different actual indicators. Why do you want to do this? Because more information is always better for you, right? If you get beyond, 3-ish actual indicators, it becomes hard to differentiate and tell what the heck is going on and see if they even actually have anything to do with each other. And so the next thing that we're going to add right here is we are going to actually add Bollinger Bands, right? Bollinger Bands, in a simple way, basically represents standard deviations away from the actual movement of the overall asset itself. And so what we're looking at right here, and it can look a little bit complicated with all these different things going on, but essentially what you can see right here is it's tracing the movement of the overall asset with one standard deviation both up and down. And so you can see right here that when the actual asset price itself, right, where these actual candlesticks are, touches the lower Bollinger Band, you can see that there's two different Bollinger Bands, one above and one below. When it touches the lower band, we can see that it generally bounces back up, right? We can see it right here, bounces back up. We can see when it crosses the lower band right here, we saw a significant bounce back up. But the funny thing is also when it hits the top Bollinger Band, it also generally tends to come down, right? And so really what we're looking for here is when the overall actual asset itself touches the lower Bollinger Band, that generally, more often than not, indicates a buying opportunity. And then combined with the actual 50 and 200-day moving average, we're looking for an actual buying opportunity when the 50-day moving average actually crosses the 200-day moving average above it, right? And if we can find a spot where that happens, right, where it also actually intersects with the Bollinger Band itself, that more often than not indicates an actual buy signal. And so you can see right here that if we zoom out on the chart a little bit, we can see an area where this did actually happen, right? We can see the 50-day moving average, the green line right here, crosses over the 200-day moving average, which is represented by the orange line, and it also intersects on the actual lower Bollinger Band. So we can see right here represents more often than not, on average, a buying signal, right? Again, where the 50-day crosses above the 200-day, and it also intersects at the lower Bollinger Band, right? And we can see right here that that would have represented a buying opportunity. Obviously, you know, there was a large sell-off here as well, but you can see that the overall volatility of Ethereum has been relatively significant recently, but more often than not, when those things actually occur, this would represent a buying opportunity, which you can see right here that if you had bought in, you would have made about 1.5% or so, and you know, this would have represented a time to sell. Why would it have represented a time to sell? Because it touched the top Bollinger Band. And so, you know, day traders who are really active with buys and sells would have bought when the 50-day crossed the 200 above at the lower Bollinger Band, and sold when it actually touched the top Bollinger Band. Now, there are a lot of different actual indicators that we can talk about. We can talk about the relative strength index. We can talk about the moving average convergence divergence. So if you guys want me to make more detailed tutorials about all the different most popular indicators and strategies when it comes to day trading, make sure that you tap the like button, subscribe and turn on the bells, and leave a comment down below that says crypto day trading. If we get 500 comments that say crypto day trading down below, I will make a part 2 of this video where we go into a lot more detail about how to automate this, how to make a machine actually make these trades for you, and all that good stuff. Or if you want to learn about all of that stuff right now, make sure you click the link down in the description. It is our $10,000 crypto giveaway. You know, all you have to do is take 6.9 seconds, actually fill out each of those things. Very easy. And the cool benefit for you for actually entering, aside from potentially winning $10,000, is you get to join our private Discord and Telegram channels, where we actually reveal altcoins before they moon, and we talk about a lot more detailed advanced strategies about day trading, what cryptocurrencies we buy, and so much more. And all of that stuff is completely free. Plus, you have the chance to win $10,000. So hopefully you enjoyed this quick video. If you did, make sure you tap the like button, subscribe, leave a comment, or if you just want to hang out and watch more awesome videos on cryptocurrency and investing, we have a brand new playlist coming to you live in 3, 2, 1. Click the playlist, guys. See you there.